Never try to time the real estate market, ever. But it is tempting because the numbers show that the Surrey real estate market has bottomed in the condo sector. And well, it looks like prices have finally stopped falling. And even though you already know that timing the market very rarely works out well, I know that you're all still going to want to try and do it. So in today's video, I'm going to share with you the secret of timing the real estate market, but particularly if you're looking for an investment condo here in my market of Surrey or the Fraser Valley. And in return, all I'm going to do is ask you to please subscribe to the channel if you would like to learn other tricks just like this one in regards to owning real estate. And once I share this secret with you, please do me a favor and don't keep it a secret anymore by clicking the like button for the YouTube algorithm, because you clicking the like button is the best way you can help me get this information out to more people who are also interested in trying to time the real estate market. Even though trying to time the real estate market is super risky and I would never recommend it. But even still, if you won't take my advice here and you need personalized advice just for your own situation, well, you can book a call with me right now down below using the link in the description. And now let's talk about timing the condo market in today's episode of Trying to Time the Market is Stupid, but as long as there are people, they will want to try and get rich quick. Now, before I start, I would like to make a very clear distinction. If you're watching this video and your only interest in getting into real estate investing is trying to time the market and flip a property just to make a quick buck, well, you're not an investor. You're what we call a speculator. Speculators are generally inexperienced and, well, they open themselves up to a whole bunch of risk. If you are trying to time the top and the bottom of the market, you are not a real estate investor. Rather, investors look to hold properties for long periods of time, and they know that if you buy a property today, it could be worth more or less in 12 months or 2 years. But in 20 years, every property will be worth a whole lot more. So don't kid yourself. If you clicked on this video because you're hoping to maybe flip a presale, my advice to you is please just don't. Do not take on that risk. However, I do know that most of you are probably just going to ignore me. And well, I would be a hypocrite if I told you not to do exactly what I did. Yes, that's right. I bought a condo for the sole purpose of renting it out. But I bought that property when I knew for sure prices were about to go up. So with all that buildup, here's the deal. The secret is that not all real estate asset classes are the same. In fact, here in my market of Surrey, BC, the detached or single family home market is the one that leads the way. Every single time that the real estate market takes off, it does so with the most desirable properties, well, they go first. In most markets, properties that are not stratified are the ones that are most desirable and attract most buyers. A good example of this is a flurry in the real estate market that started in late 2014, when detached home prices here in Surrey started increasing extremely quickly in September of that year. The detached market took off at that time into 2015, while condo prices remained flat. Then in January of 2016, condo prices finally started to take off because the detached market, it seemed to have jumped into hyperdrive. At that time, increasing over $250,000 in just 6 months. But then after that, the detached market faltered with its ups and downs all the way into 2018. At that time, condos did not see their peak until midway through that year, when detached homes had already seen 3. And that trend continued into 2021 when the single family home seemed to shoot to the moon and condos didn't take off for another 3 or 4 months after that. But detached homes don't just lead in up times. Nope, they also lead when prices start to drop. Like during the great financial crisis of 2008, when detached homes saw a 10% decrease in price, and then condos actually held pretty firm for about 6 months. So what you need to do is just keep your eye on the detached home market. And as soon as your agent says,
hey, the detached market seems to be going nuts,
and don't worry, eventually it'll go nuts again. Well, at that point, don't bother trying to jump into the detached market because, well, you've already missed it. You're already late to the party. Rather, just do what I did. In early 2021, everybody was offering on detached homes unconditionally with offers well in excess of the asking price. And it's at that time that I bought an affordable condo with full conditions and I didn't have to compete. And then eventually the frenzy that is the detached market works its way down into the lower asset classes, which are townhouses and then eventually condos. And it's at that time that I knew I would get the benefit of the price increases without paying those crazy increases and having to get involved in a frenzied bidding war. And yes, I could have gone and sold that property at the peak because this year detached home prices peaked in February and the condo market followed suit, but not until April. So yeah, I could have flipped that property with plenty of notice and made off like a bandit. But I do know one thing for sure. If I sold that property within a year, in 20 years from now, I wouldn't be so happy with that sale anymore. Because as the saying goes, time in the market beats timing the market. Let me know down below in the comments how long you think a speculator should own a property for so they can be referred to as an investor. Thank you so much for watching. Please remember to subscribe, click the like button, and we'll see you in a couple of days.